Good afternoon, everyone. Welcome to our weekly edition of Market Update. Today is 9/26/2022, and we had a little bit of a week last week in the marketplace. The Fed looks like they're definitely ready to continue to raise interest rates for a while. And one of the interesting takeaways that I got from that as I was listening to them is right now our unemployment in the United States is probably the lowest that it's been for 50 some odd years. It's been a long time since it's been down this low. And one of the things that the Fed said specifically was that they are trying very specifically to get unemployment higher, which means that if they continue to raise interest rates, it will be difficult to land that with a soft landing like they've been talking about, to where it doesn't impact businesses quite a little bit. However, with that backdrop, I wanted to today give a little bit of some good news as opposed to all of the doom and gloom that we've been seeing over the news and all of the talking heads talking over the marketplace. So I want to just address this next slide here for just a minute. What this is this is the earnings estimates for this year and for next year. And so you can see the blue line here in 2022, excuse me. You can see it started down here at just a little above 7% at the beginning of the year of what the estimates were for the growth. And you can see that it came clear up to almost 10.5% in June as they were expecting some of the COVID things to go away and supply chain issues to go away. And then we got the inflation bug and those started coming down. But the interesting thing here is that even with the downturn in earnings expectations that we've had for this year, we are still higher with our earnings than what we were at the beginning of the year. In fact, we're about 8% year over year growth in earnings this year, above and beyond what we did last year. So even with all of the turmoil that has been going on in the marketplace, the market, as far as earnings is concerned, is still doing fairly well and still holding up resiliently well, despite the downturn in the pricing. I was looking today at the price that we're paying for stocks. That price right now is about 16.58 times. The average is about 16.85 times. So we're down a little bit below average, but not much. And so as earnings grow, the anticipation is that markets will follow earnings. And as long as corporations can figure out this new environment with the higher interest rates, and it looks like that as far as the earnings are concerned, even with inflation and cost of goods and services going up, it looks like, based upon what we're seeing right now in the marketplace, is that most of the corporations are feeling like that they can pass those costs on to the consumer. And as they pass them on to the consumer, obviously that means higher prices for them, for the corporations, and it also means that they'll be able to maintain those earnings as growth on their portfolios, on their accounting ledgers. And so going forward, we do, again, as we mentioned last week, we anticipate more volatility in the marketplace. We have adjusted the portfolio a little bit last week, just based upon what we see as maybe a little bit further ramp than what we had originally anticipated for the recovery on this. But we're still hopeful that 2023 will provide at least some relief to this. We just need to get through this little period of time. Anyway, thank you for listening. If you have any calls or questions, please don't hesitate to reach out to us. We are more than happy to work with each and every one of you. We're going to be starting our annual or semi-annual reviews here shortly, and we will reach out and call each of you and have you come in and we'll go through portfolios, thought processes, and all of the rest of those things. And one more quick item, if you want to, we would be grateful if you forward this link on to some of your friends or family or coworkers or anybody you think might be interested in listening to just a weekly market update. With that, I'll sign off. Thank you so much. We appreciate everything that you're doing. And again, give us a call if you need something. Thank you.